Welcome to this week's Q&A. We've got a question from one of our viewers who we actually were able to assist last year, and he has a question in relation to should he sell his investment property that he just purchased less than 12 months ago to buy a different property in the same location because he feels that he may want to live in this future property somewhere down the track. So, great question, and we actually feel this question quite often from different expats around the world, because with property markets moving as rapidly as they have been in some areas within Australia and constantly getting news articles about the housing market losing value in different areas, so people are asking that question. But I think it's really important, and as I pointed out to our viewer, look at the longer term fundamentals of what you're doing. So strategically, why did you buy that property to start with? It was an investment property, and in this instance it was the first one of a portfolio that this person's looking to create over the upcoming number of years. So important to bear that in mind. But as with most decisions relating to lumpy assets, and property certainly is one of those, you've got to look at costs involved with buying and selling these things. So it's not something to undertake simply on a whim. You've got to look at the quantitative underlying benefits or otherwise of incurring costs in going forward with this transaction. And he said, well, look, the market's gone up, the property I can get more for it now than what I paid for it, even though the market has cooled somewhat. So I'd be making a profit, and I could put that extra money into this other property that I wouldn't mind buying because I might want to live in that later. And bearing in mind this viewer is actually still quite young, a lot of things can change over time. So as I said, I think when you buy investment property, always try and keep it unless there's a compelling reason for you to do otherwise. And I think this isn't one of those. So you're just going to incur a whole lot of transaction costs, agents' fees, stamp duty, legal fees, and potentially not really make any great headway, especially looking at buying at the same, in the same region, but just a different style of dwelling. So I would recommend to most people that they really have a very, very close look at why they're trying to sell something. And, we have a lot of viewers around the world who are perhaps in financial markets and are traders, so it's inherent in their everyday life that they're always trading assets. But property isn't one of those, or shouldn't be one of those. It should be something that really performs, I guess, the sort of more ballast function within someone's investment portfolio. It's there for the long term. It's generally leveraged to a fairly high degree, and that leverage is pretty structural, so it's not mark to market. If things change tomorrow and equity markets are 20% lower, the bank's not going to call up and say you have to put in more capital to maintain the LVR ratio of your loan. So it's pretty good, and it performs that function very, very well. You don't need to fix something that hasn't been broken. But if anyone's in this situation and they're at all sort of contemplating or concerned about what they should do with their current assets because they've increased in value, how can they capitalize on that, then by all means reach out, either email us or phone us, and we'll have somebody get in touch with you to see if we can assist you with your own personal situation. And if you found this of interest, please subscribe to our YouTube channel and click like, and I'll see you at next week's Q&A. I'm Andrew Unterweger.